Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, February 16th, and we got a lot of economic news in store for you guys today. So we're going to jump right into it. We're going to start off with the jobless claims for on the weekly level. That comes out every Thursday. Last week, we had 361,000 people applying for unemployment. We thought the numbers for this week would be about 368, a slight increase, but actually decreased down to 348,000. So pretty good news there. We've been under 400,000 for the last couple of months, which is a positive number. We obviously need to get that down more, but this is at least a good start. We got the producer price index. This is the inflationary number on the wholesale level. So this is the most important part because even though their costs may go up a little bit, they don't always pass to consumer. It's not always the case, but that's kind of where the gauge is. So that's why they don't put as much importance on this as they do on the CPI, which is a consumer price index, or the PCE, the personal consumption expenditure. So those are a little bit more important. So back in December, we had a negative percent. So their prices went down a little bit. We figured it'd jump up about 0.5%, and it only went up 0.1%. So we had a decent number right there. So let's strip out the food and energy. It gives us the core because that creates a lot of volatility in the market. And we had back in December, it should have been 0.3%, folks. I'm not sure why this is not working properly, but it should have been 0.3%. And then it went to 0.2%, where it was the forecast, and actually went up. So we actually had, take out the volatility, actually the food energy actually decreased a bit on the whole level, but right now it went upwards when you take that stuff out. Now, housing starts for January. We had back in December 689,000 housing started. We figured it would be right in the same range, 688, and we actually went up. So January housing improved a bit, so we have some better numbers there as well. So far we have some decent numbers. We have the jobless claims are down, housing starts increased. Producer price index, obviously that's not the greatest because it went up 4.4% on the core level, and that's kind of what they look at more when you take out the volatility. And then next item to note is the Philadelphia Fed Index. This is the manufacturing in the Philadelphia region. If you remember earlier this week, we had a nice a reading from the New York region. So let's take a look, see what Philadelphia had. Back in January, it was 7.3. We figured an increase to 9.5, and it did exceed that. So, so far on the Northeast area, we're having some good manufacturing levels, so some improvement there. So let's hopefully that continues. Now we'll look at the headline news here. Stock market's up right now. So all those economic news releases were good news. So investors are liking it. And the other part is that there's a report out the European Central Bank that will be swapping out Greek bonds for new ones. So basically, they're going to exchange the old ones and renew it, and basically kind of spread out their payments, so it makes it a little bit easier for them to make their payments and not potentially default on there. So it creates the investors kind of like that idea that they may do, but on the political level, there is still some instability there, where a lot of people just don't have a lot of faith in the Greeks in the European Council, in the European community. So there's still some, you got Germany who's kind of putting a line down how much they want to do, and you got some people that just don't want to bail anybody out. So let's jump over to the bond market and see where interest rates are moving today. Actually, we're down right now, so rates have worsened today. We do have opening gap to the worst. We're below the 10-day moving average. We are testing the floor where we've had the level we've been at. But we did. The good news is that we did close that gap, as I mentioned. Usually within a few days we do close the gap. So if we have these big opening gaps, they're not going to last for very long because they do have a tendency to close. So with this move here, we have a gap close, and now we have potential to either rally or, of course, drop further. So depending on what may come out later on. But right now, rates have gone up a little bit as a result. So, all right, folks. So you guys have a wonderful day. We'll call it a quit, and I will see you tomorrow, Friday. And if you guys are on Mike's Daily Market Report, please subscribe, get your free updates. Have a great day.